The moment revenge trading takes control of your mind, you stop being a trader and start becoming a gambler with a very expensive habit. That might sound harsh, but if you've ever watched a perfectly manageable loss turn into a devastating account blow-up within a few hours, then you already know exactly what I'm talking about. You can probably still picture the chart. You can still see that trade that didn't work. You can still feel that surge of frustration rushing through your body when the market moved against you. Suddenly, the only thing that matters is getting your money back. And that's where the destruction begins. Because revenge trading rarely announces itself. It doesn't walk through the front door wearing a warning sign. It sneaks in disguised as confidence. It tells you that one good trade can erase the pain of the last one. Sounds familiar, doesn't it? The dangerous part is that revenge trading feels logical while it's happening. That's why so many intelligent people fall into the trap. You're not stupid. You're not incapable. In fact, many revenge traders are highly disciplined people in other areas of life. But markets have a unique ability to expose emotional weaknesses that remain hidden everywhere else. Think about the last time you experienced a significant loss. Did you immediately start looking for another trade? Did you suddenly begin seeing opportunities everywhere? Did setups that looked mediocre 5 minutes ago suddenly appear irresistible? That's not market analysis. That's emotional compensation. Your brain hates pain. It is wired to avoid it. Financial loss creates a powerful emotional response because your brain interprets it as a threat. The moment you lose money, especially money you expected to make, your nervous system goes into defense mode. Rational thinking starts fading into the background, while emotional impulses move into the driver's seat. You stare at the chart. The candles seem louder. Every tick feels personal. You can literally feel your pulse speeding up as price moves. Your mind isn't focused on probabilities anymore. It's focused on relief. Relief from embarrassment. Relief from frustration. Relief from the feeling that you failed. The market knows this. More accurately, the participants controlling massive amounts of capital understand this. Institutions, market makers, and large players understand crowd psychology better than most retail traders understand their own emotions. Have you ever wondered why breakouts often fail right after attracting maximum attention? Why price seems to target obvious stop-loss levels before reversing? Why emotional traders repeatedly buy highs and sell lows? Because financial markets are built on liquidity. Large players need liquidity to enter and exit positions. Emotional traders provide that liquidity. When fear reaches its peak, retail traders panic and sell. When greed reaches its peak, retail traders chase price higher. And when frustration reaches its peak, revenge traders become some of the easiest targets in the entire marketplace. This isn't some conspiracy theory. It's market mechanics. Imagine thousands of frustrated traders all trying to recover losses at the same time. Their decision-making becomes predictable. They increase position sizes. They lower standards. They ignore risk management. They enter trades emotionally rather than strategically. Now ask yourself a difficult question. If your behavior becomes predictable, who benefits? Certainly not you. The market doesn't reward emotional urgency. It punishes it. That's why revenge trading feels like quicksand. The harder you struggle emotionally, the deeper you sink financially. One loss becomes two. Two losses become five. Five losses become an account-threatening disaster. And the truly painful part isn't the money. Money can be earned again. The deeper damage happens internally. Confidence begins to disappear. Trust in your system erodes. You start doubting every decision. You begin questioning whether you're even capable of becoming consistently profitable. Yet the irony is that the original loss often wasn't the real problem. The revenge trading was. Many traders can survive a losing trade. Few survive a complete emotional breakdown in discipline. How many times have you promised yourself that you'll stick to your plan? How many times have you said, "Next time I'll walk away after a loss"? How many times have you meant it with complete sincerity? Then, the next losing trade happens, and suddenly the emotions return. This is where most trading advice fails people. People tell you to control your emotions, But emotions aren't switches. You cannot simply turn them off. The solution isn't emotional suppression. The solution is emotional awareness. The elite traders understand something that struggling traders often miss. They don't eliminate emotions. They recognize them early. They notice frustration before it becomes revenge. They notice greed before it becomes recklessness. They notice fear before it becomes paralysis. That small difference changes everything. Because once you're aware of an emotional state, you regain the power to choose your response. Without awareness, emotions drive behavior automatically. With awareness, emotions become information instead of instructions. The next time you experience a loss, pay attention to what happens inside your body. Notice the tension. Notice the urge to act immediately. Notice the internal dialogue demanding recovery. That voice will sound convincing. It will tell you the next trade is obvious. It will tell you the market is giving you a second chance. It will tell you that waiting means missing opportunity. But here's a truth that took many professional traders years to understand. The market will still be here tomorrow. The setup you're forcing today may not even exist. Your capital is more important than your ego. And your future financial freedom is worth infinitely more than the emotional satisfaction of winning back one losing trade. The best traders in the world don't measure success by today's profit. They measure success by their ability to survive long enough for probabilities to work in their favor. That's a completely different mindset. Instead of asking, how can I recover this loss? They ask, how can I protect my capital? Instead of asking, how much can I make? They ask, what happens if I'm wrong? Instead of chasing emotional relief, they pursue statistical consistency. The market rewards that approach because markets operate on probabilities, not emotions. Every trade is uncertain. Every setup can fail. Every analysis can be wrong. Accepting that reality creates psychological freedom. Resisting that reality creates revenge trading. And once you truly understand that, something powerful begins to happen. Losses stop feeling personal. A losing trade becomes a business expense. A stopped-out position becomes data. A red day becomes feedback rather than failure. Suddenly, the emotional intensity starts fading. You no longer feel compelled to fight the market because you understand the market was never attacking you in the first place. The market doesn't know you exist. It doesn't care about your goals. It doesn't care about your mortgage, your bills, your dreams, or your frustrations. It simply reflects supply, demand, liquidity, and human behavior. The moment you stop taking losses personally is the moment revenge trading begins losing its power over you. Picture yourself 6 months from now. 2 possible futures stand in front of you. In one future, every loss triggers emotional reactions. Every setback leads to impulsive decisions. Every mistake compounds into larger mistakes. The cycle continues exactly as it always has. In the other future, losses still happen, but they no longer control you. You step away when emotions rise. You protect capital aggressively. You trust your process. You think like a professional instead of reacting like a victim. Which future seems more likely to create financial freedom? Which future would the strongest version of yourself choose? Because at the end of the day, revenge trading isn't really about money. It's about identity. It's about whether you're going to let temporary emotions dictate permanent financial consequences. Every time you refuse to revenge trade, you're strengthening the habits that build long-term success. Every time you walk away after a loss, you're proving that discipline is stronger than emotion. And every time you choose patience over impulse, you're becoming the kind of trader who survives long enough to win. The market will always test you. The question is whether you'll continue fighting your emotions blindly or finally learn to master them before they destroy the financial future you're working so hard to build.